Hey guys, it's Michael.Realkey here, your annoying millennial realtor. And today I'm back again with a little mini series on mortgages. Okay, now basically I want to go through mortgages because a lot of millennials, we're first time home buyers, right? So there's a lot of things that we're not used to that we're doing for the first time. And I think it's important to get a grasp of the financial background that you're going to need in order to get yourself one of these mortgages, right? The first thing I would say about a mortgage is it's a line of credit or a loan, let's say, for you to buy a house. Most of us are not going to have the ability to pay for a house upfront in cash. I mean, maybe you will, more power to you. But most of us, especially millennials in this day and age, we're going to have to borrow from a bank or a lender in order to be able to afford a house, right? So the first thing you want to know about mortgages is this. Not only is it a loan, but it's a specific type of loan. It's a loan that we call a secured loan. And what that means is there's consequences if you don't pay the bank or the lender this loan back. So basically what happens is instead of like a credit card where you just max it out and you're in debt, they don't come after any assets of yours. This is different because if you default, that's what happens. I mean, that's the name of it. When you don't pay your mortgage on time or don't pay it at all, they're going to come after your home. So your home's at stake. You're putting up your house basically. You're betting on your house that you're going to be able to make these mortgage payments, right? So I think it's important to go over some of the things that we're going to need to get a mortgage as millennials in this day and age, and also some of the financial terms that we need to know in order to make smart decisions when it comes to shopping for a loan. Because just like shopping for a house, there's also a market for loans, right? So you want to be able to negotiate and navigate your way to a good deal. And it's not just the interest rate you're talking about, right? There's certain fees and terms, amortization, that you want to make sure you get all of these things down so that you can make a good buying decision and your home buying process will go smooth after that. So let's get right into it. One of the first things that I'm going to mention in this video for mortgages, right, is credit, okay? Credit. Now, credit is very important in the home buying process, right? No matter where you are in the home buying process, in order to make the leap from a home renter to a home buyer, or even if you're living in your mom's basement, you're gonna have to have a fairly clean financial background, right? And that means a good credit history with a good credit score, and also the ability to show that you have little to no debts, right? And that you're a responsible borrower, right? So that lenders are going to want to give you money. And then you're going to be able to qualify in general, right? So the first thing I would say is you're going to want to get rid of as many debts as possible, right? Student loans is a big one, lines of credit, credit cards, any outstanding debts, you're going to want to know that they're paid off before you even start looking for houses. One thing I find is a lot of people, especially millennials, because of the amount of information that there is, technology is allowing us to just go on any website, condos.ca, realtor.com, and just kind of search houses and, get excited about the home buying process. But really, you're setting yourself up for disappointment. If you don't go in here and get your mortgage qualifications done, your pre-approval in order, you're really searching for nothing. Well, potentially, right? Because, excuse me, you're going to go and find this home that you love, you're going to fall in love with it. And then when you go to actually pay for the home, you put the offer in, the mortgage is, you say 5 days, and then 5 days comes, and the mortgage says, we didn't approve you for this loan, you don't qualify for it, which is heartbreaking, and I've seen it before, and I just kind of want to help you avoid that common pitfall, right? So first thing is get your pre-approval, but even before that, get your groundwork done, and the first thing is the credit, right? So a couple more things about credit. Lenders basically, they want a credit score at least 650, or higher. Anything lower, you might have a little bit more difficulty. Like, it's still possible to get a loan, but you might have a little bit more difficulty, getting the loan, and you might also have to borrow from a B lender. And what that really means when we say B lender is somebody who is going to charge you a higher interest rate, basically, on your loan. And that's some of the drawbacks you're going to have from not coming in there with your groundwork ready, or not having it tip-top shape where it should be. So groundwork can take a lot of time. I see people on 1-year plans, 3-year plans, 5-year plans, even 10-year plans. And it's important not to compare yourself with other people. You know, I see a lot of millennials these days comparing themselves with people on Instagram and TV, and they hear stories and they want to be like this person and that person. But it's important to realize everybody's at a different stage in their life, and that's okay. So get the groundwork done, get your credit score and credit history immaculate if you can, and that's just going to make your home buying process a lot more simple, a lot more easier. I promise you. Employment, right? I don't know if you guys ever seen the movie Friday, but basically one of the scenes very early on in the movie is Craig goes to his